Bitcoin is struggling. Larsson line, is it up or is it down? Tea leaves, I need tea leaves. How to read tea leaves. Dot means money, but if the image is cloudy, it means loss of money. No. Luck! I need luck! Oh. Ah! Hello? Hello?
Hello there. This is James. This is the Bitcoin hotline. How can I help you today?
Bitcoin is falling over here. Can you do something, man?
Yes, we can. It's a very centralized organization. Hold on a second.
Thank you. Thank you.
We can pump up the price. We're pumping the price right now. Oh, it's going up.
Oh!
See?
Oh! Yes, it's working! Thank you! Thank you! Thank you! Finally someone doing something about this on this company.
Exactly.
I'm extremely proud to have you on today, James, because we've had Alex Mashinsky with Celsius, our #1 unbanking champion of crypto. We've had Carlos Matos, the #1 meme of crypto. We've had Ivan on Tech with Morales, the #1 programming framework of crypto. And I feel that you have the #1 YouTube channel of crypto. Except my own, of course. At least for me, because I always learn something new from your videos. Bitcoin is in a tricky spot. My indicator, Larsson line, is still gold, but if it continues like this, it's going to turn down at some point. You made a very interesting video where you nailed, you call it the max pain, within $500. How did you do that, and what's your take on the price action here?
That's interesting. So I look at the charts between 12 and 16 hours a day. So when you do that a lot, and anybody who's in the investing game, it's very, very important to be very dedicated. It's not something that you get in and look at, unless, of course, you're a long-term holder. If you're a long-term holder of Bitcoin, you don't have to worry about that. But what I try and do is really understand how the animal moves. I believe any stock or any crypto is like an animal. It has predictive movements. Now, they are based on a number of different things. So to identify the max pain 55, which ended up being 55.5, which we hit 3 times. And I've done this many times. And I publish all of this on Twitter and in my videos on YouTube. So as I say, the internet doesn't lie. You can't change a tweet. It's out there and it's date stamped. So first, I look at the charts, I look at the movements, and I look at the money flow. That's very, very important. Second is I use the thing called VPSV, which looks at who's buying and who's selling at what price levels and point of control. The third thing I look at a lot is what I call Bollinger Bands. And when certain things fall out of Bollinger Bands, and you look at the price action like the VPSV, you can tell exactly, okay, who's coming in and who's buying at this level. Then I look at RSI, and then I look at MACD to confirm RSI, that things are turning around. And the other one is you got to look outside of just TA. I look at the smart money movement onto exchanges, smart stablecoin balances, etc. Now, when I looked at the smart money as well, the other thing was the options expiry point of max pain. That's why I called it max pain. So per the expiry, you had that level that I calculated about 55K. And that gave me another, it was like 7 data points saying 55K is the floor here. But finally, probably the most important one is point number 8. I think I did 8 points, is the Fibonacci retracement level. It was exactly at the 0.5 level. Exactly. That's where the 55 came from. So when I get confluence of 5, 6, 7 different data points, all telling me the same thing, then I have absolute confidence to make a post like that and say, this is the bottom, everybody. Set your limit orders a little higher than that. And if you need some, get some. Not financial advice, of course. So that's how I did it.
Exactly. Oh, that's fantastic. You came out of nowhere. There were many crypto channels that were there much longer than you. So my first question is, how many years of trading was it behind InvestAnswers' overnight success?
That's a good question. Well, it's a weird situation. I started in the financial risk management arena back in 1991. in a place called Switzerland, and the rest is history. So I've started looking at things like currencies. My first big trades were dollar yen transactions. And I learned a lot because early on in my career, I got very lucky in the beginning. And then I got very greedy and very careless. And I made a big mistake that was probably the best thing that ever happened to me, because the scar tissue from that mistake made me make sure that I never make that same mistake again. So I just consumed as much content, as material, and as education in becoming extremely good at the game. So as good as I could be, because I always had a vision as well of retiring early and giving back to society. So that's where
But
I am right now.
how many years have you been trading?
31 years.
31 years.
I'm in my
So
50s.
So 31 years behind the overnight success.
Exactly. Well, the YouTube thing is kind of funny because I retired. I always had a plan when I was younger, more than 20 years ago. My father worked his entire life. He retired at 66, diagnosed with cancer, and died. He had zero retirement. And I said, this isn't going to happen to me. So I wanted to find a way out of the so-called wage slavery race as much as possible, as quickly as possible. And I was able to do that actually pretty much at the same time that the pandemic or endemic hit. And then after some time, I did a little bit of consulting and got bored, but I saw the biggest asymmetric bet of our lives. And I said, you know what? I need to tell people about this. So I made my first YouTube video. It was October 7th, 2020, to convince my network to buy Bitcoin. I said, if you have one child, buy one Bitcoin. Two children, two Bitcoin. At the time, Bitcoin's about $9,000-$10,000, and I convinced them. I said, by 2030, Bitcoin is guaranteed to be at least $108,000. Guaranteed, mathematically proven. Here is the proof. And I couldn't convince any of my network to buy, but the video accidentally went viral, and here I am. So there was a hunger for this type of information, objective, no shill, no frill, as I call it, information. I'm not bought by anybody, influenced by anybody. I actually blaze my own trail, as I say, to try and help others navigate this very, very dangerous world. Because, I always say it's a zero-sum game out there.
But you did social media before the crypto experience, didn't you?
Yes, I did. As both my parents actually died of cancer, so I spent about 10 years trying to help people not only live healthier lifestyles, better nutrition, identify things like cancer early, which is very, very important. I did this for 10 years and I blogged every single day. But even after a decade of doing this, I had something like 700-800 people following me on Twitter. Nobody's interested in health. However, they're interested in money. So it was just it was a huge wake-up call, But I do firmly believe that health is wealth, because without health, you have nothing.
Oh, absolutely, absolutely. The rest is worth nothing without it.
Exactly.
I find it so interesting when people look at someone at the peak of their success, and it looks so easy. You came out of nowhere and you had no subscribers, and suddenly you have hundreds of thousands of subscribers, and it's what many people dream about. And how could you do it? Maybe you got lucky. Maybe it's, the algorithm picked up your channel, or it's not like that, right? It is because you had the experience of actually being able to share something, and you had the experience of working with social media, and there were a lot of things behind that overnight success.
The voice was kind of different. Number one, I have a lot of experience, and number two, a lot of breadth. So, everything from fundamental analysis to options trading to technical analysis. I build a lot of models. I do a lot of quant research. And I think that was kind of interesting for somebody in YouTube to bring so much to the table that covers all bases. And I also work across equities and crypto. So it's not just crypto. And I have a lot of experience as well in evaluating and appraising companies and their value. And that same type of premise can be used in the crypto space too. analyzing total addressable markets, team, tokenomics, all that type of stuff. So that's helped me kind of separate the wheat from the chaff out there in the crypto market too. A lot of people don't do the work.
So how did you learn that? How did you learn to build these models that you share in so many of your videos?
Yeah, a lot of time was spent analyzing kind of partnerships and analyzing strength of partners. And from that, you look at technologies within different companies. I spent a lot of time at companies like Oracle, Adobe, and stuff. And if you look at the fundamentals of a partnership or an acquisition target, do they have the technology that fits? Do they have the technology that can stand the test of time? Do they have the balance sheet that can support development, et cetera, the sales, the marketing, the adoption, the growth rates? And it's all very similar. You take the similar application of that to the crypto space. You look at adoption, active users, dApps, DEXs, developers. It's all the same. It's identical, pretty much.
I remember the first video I saw. It was completely different. You did a type of analysis that I hadn't really seen anyone doing before. And it was really, like you say, it was a combination of many different skills.
That was the 10-point analysis framework that I built.
Yeah, it was.
That framework I've had for a long time. I just applied it to crypto and it worked. So, but it also forced a lot of discipline. So a lot of things like the tokenomics and the insider concentration of shares and inflation rates, all of that stuff is just so important in this space. And people they just don't take the time to look, unfortunately.
Yeah. Now, for example, a lot of people, including us maybe, we're a little bit concerned about the Mt. Gox coins and when they will come out and so on. That is 1%, right? It's 1% of the supply, because you did work to try to refine how many Bitcoins are there. And what was your conclusion? How many are left in some sort of circulation?
Yeah, that's fascinating. So I became a little bit more about my background. My father was an accountant. So at the age of 6, I knew what a ledger was. So I had that experience, which is very important. The second thing is I have a number of finance degrees and a master's in finance at the top finance school in the world. And I spent a lot of time looking at microeconomics and macroeconomics. So you combine all that together, you become obsessed with the fundamental supply and demand and the very limited supply of Bitcoin. So since 2017, I've been digging into tracking exactly who owns the coins and how many coins are lost and how many coins are coming into the market every single day, every single year. And I've been building and expanding these models. Every time I come across a piece of information, like some poor fellow drowns in Costa Rica, he has the seed phrase in his head, he loses 140,000 Bitcoin. It goes into my sheet, goes into my model. So I track this very carefully. And I know for a fact that there will never be more than 14 million Bitcoin. People always talk about 21 million Bitcoin. There will never be more than 14 million for many, many different reasons. One, the number that are lost. Number two, the Satoshi lockup of 1.04 million coins. Number three, the continual deflation of people losing their crypto. So I have a community of about 10,000 people. Our team is on the receiving end of people sending Bitcoin to the wrong address or crypto to the wrong address or forgetting their seed phrase or their external wallet is broken or lost or there was a water damage or whatever reason. It is just incredible how much is lost. So I estimate that in my worst case scenario by the year 2040, there could be less than 10 million Bitcoin. If people continue to buy Bitcoin at things like ATMs and supermarkets and have receipts on a little piece of paper and all of these many, many different reasons. And also, if you look at hard drive life, I'll ask you, you're a technical guy. How long does a hard drive last?
Yeah, it lasts until it breaks. And when it breaks is when you realize that you should have made another copy. And I mean, I agree completely. And the operational security is difficult. How to secure your Bitcoin, even with a hardware wallet, in a secure way is difficult. You have to both make sure it doesn't get accidentally found. The cleaning lady finds a seed words or something. So you both need to hide it and you need to keep it safe. To do this correctly is fairly difficult.
When you talk about OPSEC, you know a lot about OPSEC. I mean, a top developer in San Francisco, German, extremely organized, meticulous
yes, exactly.
in everything you can imagine. He lost his seed phrase.
Yeah, absolutely.
So it can happen to the best of the best, and people the people don't realize how important it is and how hard it is and how disciplined you need to be. You are
Yeah.
running your own security like you're running your own bank, and people absolutely underestimate this every single day, even professionals.
Oh,
That's why
absolutely.
I'm convinced of my thesis that many Bitcoin will be lost.
So guys, if you don't learn anything else today, you learned a new number for how many Bitcoins there are. I think you're absolutely right. That means that it's about 1%. Mt. Gox coins that are to be distributed sometime early next year, they're about 1%. We're a little worried about it. The market is worried, people write about it. That 1% number I think is good to keep in mind when we're evaluating projects where there are founders and teams holding 50% or 60%. Here we're talking about 1%, and it is still a concern. So I think that's something else that a lot of people, you mentioned before, how to evaluate the tokenomics and all those things. This is a factor that I think is greatly underestimated in great many projects. It just hasn't happened yet. They just haven't started selling yet. But when they do, that will have impact on a lot of projects. How do you feel about that?
Absolutely. So you take, for example, the concept of APY. And people say, oh, I can buy Axie Infinity and get paid 140% APY on my tokens. But they really don't understand there's a pile of tokens in the back. They just reach and kind of dump on the market. The whole chain pays the tokens. And this is why there's so many more sophisticated kind of Ponzi schemes like Hex and others, rob Peter to pay Paul. You look at the 51 billion tokens in XRP, etc. It's as clear as day. All the information is there. But when a chain does not disclose all the facts about tokenomics, that's a huge red flag. And you're right. There are a lot of people, unfortunately, will lose a lot of money because they are enamored by the easy money. And there's no such thing as easy money. You'd think if everybody could get 20% APY or 140% APY on an asset, do you think the big institutions wouldn't be investing, looking for alpha instead of losing money on their melting ice cube of fiat cash? So that's the problem of where we are now. I'll take this down too because we're switching gears from Bitcoin.
We have often come to the same conclusion from two totally different directions. I come more from the technology, ecosystem development perspective of long trends that tend to move for a long time in the same direction and then they start moving downwards again. And you come more from a more detailed financial analysis, modeling. I've been pretty good at finding the midsections of the move. Not the bottom, not the top. Those can be large. They can be 100x moves. That's what I'm focusing on. While you have a methodology where you really are able to find the local bottoms, the local tops, what is the behaviors of the players at those points. And that's really an advice for everyone watching this, that I cover the trend methodology, but James really has another complementing perspective many times. And I personally learn a lot from that. And I recommend everyone who isn't subscribed already, if anyone isn't subscribed to James, you should definitely do that also because it's a complementing perspective.
I appreciate that. And and that's why it's very, very important as well to pull in a lot of data points to substantiate your thesis as you go forward too. So a lot of people say it's impossible to pick tops and bottoms, but I've been doing that my entire life. And that's what I've been focusing on is a confluence of indicators to be able to nail that. And the reason I have to is because I get into very heavy leverage positions, options positions. So if I'm wrong picking a bottom, I lose a lot of money. If I'm wrong picking a top, I lose a lot of money. So you really have to make sure you know what you're doing or else you get into trouble. So like a Tesla short, I got into a very big Tesla short a couple of weeks ago when Tesla went above $1,200. And
you also had a major Tesla long, isn't it?
Yes.
Previously.
So yeah, exactly. So I play the cycles. I'd be like what you call a medium-term swing trader.
Tesla is a very emotional asset for many people. How do you separate your emotions from the trade?
You just nailed the number one rule of investing. You've got to be a machine. You cannot have any emotion. You cannot get wedded to. I always say it's kind of funny. First of all, if you were going to invest in something, you research it like you're going to get married to it. But then I say you can't have any emotion. So if you decide, hey, I need a divorce, you have machinery telling you to need the divorce. So one of the other rules that I have in investing is know your exit before you enter. So imagine you're buying something at $10. You say, I'm going to sell it at 20. And you do that before you even buy it in the first place. And I do that a lot with cryptos as well. Like, for example, Avalanche. I bought it at $10. I said my price prediction model says it's going to do at least 5x, going to be worth $50. And then right at 50, I sold and I sold way too early, and I'll take that. But I sold it and put the money into Solana because I believe in high conviction investments, and I don't believe in the tokenomics of Avalanche. So I stuck to it. I could have sold it, I could have kept it, but I decided no, I will stick to my philosophy, and that's what.
How can you do that on a difficult to analyze asset like Tesla or cryptos? They often go much further than everyone thinks or anyone can even imagine sometimes.
Yeah, Tesla's my biggest equity position. So I analyze that. I've been analyzing that daily for nearly 5 years in great detail. I have my own price prediction models. In fact, I came out with a price prediction model a month ahead of ARK Invest's price prediction model. And their bear, expected, and bull case scenario were exactly like mine. And again, that's also on Twitter. It's also in a video because I was surprised how Kathy Wood and her organization had exactly the same prices as mine. And mine came out a month earlier. So you can't make this up.
Wow.
So I look at things like battery capacity, gigafactories opening, the number of models, the demand, and the margin. And I calculate what I believe to be a fair earnings value. I was telling people all during the summer, I said, people think Tesla's trading at a PE of 1,200. And this is when Tesla's like $540, $600, $640. I said, no, on 2022 earnings, it's trading at a PE now of 77. You got to buy this thing. This is the same value as Google on a comparative PEG ratio basis. And people thought I was crazy. It's like, now look at it. So, but I do believe there's a top as well. So that's how you come in and you say, okay, 540, 640, crazy cheap on a comparative basis. But now at this $1,100 level, $1,200 level, it's too expensive. And what things do in investments, oftentimes, and we're talking 80% of the time, sometimes 90% of the time, I believe very much in Pareto efficiency, things revert to the mean. So you have your mean line. I look at 200-day moving averages, 50-day moving averages, etc. And you know that if something shoots right out of a Bollinger Band way up north, real high, like Tesla is right now, it has to come down to earth eventually. And that takes sometimes 4 weeks, sometimes 12 weeks. Then it will revert. Then it'll go on its next leg up. And that's what I do. I kind of imagine these kind of upward ellipses all the way up the chain. And that's what I trade. That's how I swing.
So price prediction model does not mean to pick a random number, post it on Twitter and say that this is my price prediction. It means spending 5 years building a model and actually calculating something, and then you have made a price prediction. Is that correct to say?
Right. Lots and lots and lots of quant and fundamental analysis.
Because a lot of people have a lot of price predictions in crypto.
Exactly.
I usually say I don't believe in that because it's a number pulled out of the sky in the best case and pulled out somewhere else in the worst case.
I'll give you another example, another good one I analyzed very heavily, and I have these videos called Should I Buy for Crypto? There's a token called VeChain, which is a supply chain management type, decentralized token type play, crypto play, which I find very interesting because I spent a lot of time working at Oracle. I know supply chain management software very well. I know the two players are Oracle and SAP. I know how big the total addressable market is. I know the margins. So I took that exact business and I compared it to VeChain. And I looked at the total addressable market and potential market share and all the fees and costs that they have and the tokenomics. And I said to people, there's no way this thing, because of the tokenomics, can exceed 33 cents, this bull run. And you have all these YouTubers, etc., saying, no, it's going to $10, it's going to $10. Like, no, it can't. It can't go above 33 cents. It just can't. If it does, it's stupidly overvalued. And that's because you do the work behind the scenes. And then when somebody says it's going to 100x or 10x, it can't. It just, gravity doesn't allow that.
is it fair to say that you have three complement? You have your valuation models, you have the chart analysis, and you have the behavior analysis of what players are doing in the market?
Sort of. So first of all, when I look at investing, you've got to have a number of tools in your tool bag, or else you're at a disadvantage to your competition because it's a zero-sum game. For every winner, there's a loser. So number one, you have to have the right mindset and dedication. And what I mean by that is you need to be able to enjoy what you do. If you hate it, you will not be good at it. So that's very, very important. First of all, don't get on this train unless you really have a passion for it. And it's like with anything in life, any job. Second thing is financial literacy. You have to be able to be financially literate, be able to read financial statements, be able to read white papers of, say, crypto, etc., and really tear them apart. Go real deep. If you don't go a mile deep, you're going to miss something, and that could cost you. Then you need hardcore analytical skills, and this is a big bucket into itself. This includes technical analysis, this includes quant analysis, this includes model building, building valuation models, etc. Everything you can imagine. That's why I love macroeconomics and inflation and the environment we're in, because it's so easy for me to say, okay, Bitcoin's the asymmetric bet of my life, because I can put all my models together and it just points up. It's like mathematically programmed to go up. Then you need extreme financial discipline. I can't stress this enough. You need to be able to manage risk. You need to be able to size investments appropriately and know when to get in and know when to get out. Critical. And with that, I believe anybody has the ability to generate perpetual income and do very well in the markets. But it's not to be taken for granted.
Would you say it is a learnable skill for everyone, or is it not suitable for most people?
Well, that's an interesting question. So one of the things that makes me successful is I am highly analytical. I stay awake at night thinking about numbers. Everything I do is quantified. If I buy something, I calculate what that costs in sats, what that costs in other opportunity cost of spending somewhere else. So maybe you need to be quite analytical to be very successful. But if you're not, you can find ways to getting access to tools that help you. For example, your indicator. For example, some of the indicators that I share as well. These things can help shore up gaps that people have. But again, that mindset that I mentioned is very, very important, because you need to know what your weaknesses are and then shore them up, fix them, close that gap. It's like imagine something simple like a vehicle. You could have the most beautiful car with the fanciest wheels and dashboard and leather seats and engine and everything else. But if the exhaust isn't working, nothing will work. So identify what the problem is and shore it up. So I can say, okay, what are the top?
1 second. You want to say hi to my wife?
Hi there. I'm James. Pleased to meet you.
Hello. Left side. Oh.
Yeah.
Hi,
Hi
James.
there. My name is James.
One thing. My father watched you. Watched you and watched your channel. And he was, when I was mentioning today my husband had a live interview with some crypto guy, and then he was like, yeah, that one is James, he has a lot of subscribers, that one is big on YouTube.
Exactly.
So yeah, my parents.
How old is he?
He's 73.
Yeah, 73.
Amazing.
Lives in Hanoi. And very bright man. He had a big role in telecom actually in his day in Vietnam. But he watches your channel. He watches my channel also. So I have to be careful what I say with father-in-law watching from Hanoi.
Yeah, no, that's amazing. I have a lot of people in their 70s now because they are very anxious about retirement and inflation, and people are super, super interested, especially. I find a lot of people, I've got a lot of males in their 70s in my community too, and they're amazing options traders, amazing investors, getting into Bitcoin hard because they get it. So some people get it. I also have a Japanese grandma in Tokyo. Her name is Junjun. I don't know her full name, and she is just amazing. Like she's like, yeah, I bought 100 Solana because your model says I need 300 to retire, but I'm 1/3 of the way there, etc. The Tokyo is expensive.
Oh,
So
that's
it's
amazing. A fun fact is that we're both amateurs on YouTube, James. She has a video with 28 million views.
No, it's 32 million views.
wow.
Yeah.
That's incredible.
Yeah, so but it's just a side hobby. It's just a side hobby.
It is, yeah. It's 9 a.m.
Yeah.
here.
Have a great
9:40.
rest of the day.
Thank you.
Thank you. So how about this, James? Because we conclude here that we have different perspectives. I come from the technology angle of ecosystems are growing. I have the trend tracking methodology where I try to get on a technology trend and try to hang on to it for the entire duration and then get off. While you have complementing tools. You analyze the projects quantitatively. You analyze the charts on the top and bottom identification and so on. How about we get together, we add our different perspectives, and we do a show, a live stream where people can suggest, they can ask what coins they want analyzed. We bring them up. I bring them up with Larsson line. You bring them up with your frameworks, your tools, your analysis methodologies, and we spend perhaps 5 minutes, 10 minutes on each project, and we move on to the next requested by the audience. What do you think? Should we do something like that?
That could be good. There is a small danger, though. Sometimes if you call somebody's baby ugly in this marketplace, it can bring about a lot of backlash. So let's, if we could try keep it to really good established cryptos, like some of the layer ones, maybe some of the metaverse plays. I think that would be very interesting, but I don't want to get into looking at meme coins or Ponzi schemes or things like that.
Yeah.
And I'm open to it because
that sounds like a great. We will probably make enemies with everyone in this session, but maybe it could be fun.
Yeah, I think it's important as well as a tool for people to learn how and what to look for when they start getting married to a token. If they really have to get investing in something, the red flags to watch out for. Very, very important.
Yeah, and I feel that it could be an idea to show that sometimes it doesn't take that much to do some analysis. Instead of just listening to what people are saying on Twitter and just be in a kind of reactive mode, follow other people, and someone said on Twitter I should buy this, someone said on Twitter I should sell that, and so on. And my desire is that people will be able to build the knowledge and, like you said, have the tools and the skills and the capabilities to do their own analysis and trust themselves that I've actually looked into this and that's why I'm doing something, not because some animal avatar on Twitter said something, because that's never going to work in the long run. It's not. I don't know. I've never met anyone who have been long-term successful in investing by listening to what someone else tells them to do. Have you met anyone?
No. In fact, that's why I'm a very big believer. I actually am very selective in what I listen to and what I read. And most of the stuff, because I believe in mathematics, I like to build models that give me the answers. It takes the emotion out. So if people say, hey, you don't like token X, I said, no, I don't care, plus or minus about anything. I do what my model tells me. And that's why you and I are very similar, because you do what the Larsson line tells you.
Yes.
And that's how you make success. You have to know kind of your style, what type of trader you are. You have to find a system. You have to keep it very simple. You have to know the space you're interested in. Practice paper trade first before you play with real money. Don't overtrade. Don't buy too many things. If you're losing, stop, figure out why. Never stop learning, never stop consuming. Somebody asked me how much do I read a day? So I read about 300 to 500 articles every day. I spend the whole morning when I wake up reading, and I read very fast. So I consume a ton of information covering a wide variety of topics. And that's very important as well, because this is a professional job. This isn't a hobby. This isn't like building a model aircraft in your garage and flying it at the weekend. This is, very heavy dedication to be serious, or else you're guaranteed to lose. You might make a quick on a meme coin, but eventually it'll catch up and you will lose. bleed all
I
over
think
the floor.
investing is one of those things where it seems so trivially easy. You just buy low and sell high. How hard can it be? And you just log
Yeah.
in and you press the button when it's down, and then you sell when it's up. How
Yeah.
can that be difficult? It seems trivial. Anyone can
Right.
do it. And
I suppose-
that is
yeah.
until the day you realize that when I'm selling, someone else is buying, and when I'm buying, someone else is selling. And since money is unfairly distributed, probably the person sitting on the other side has a lot more money. And then why is that person taking the opposite action? Why are they doing that? Why am I selling if they are buying? And vice versa. And I feel at that moment is when something changes, that you realize you're actually playing against someone. And
Yeah.
that someone potentially is doing this professionally. And if
Yes.
you put in 1 minute of effort, scrolling little on the Twitter feed and doing what someone tells you to do, that's not going to work.
And you're trading against me, who's done thousands and thousands of hours analyzing the top 300 cryptos. It's a big difference. There's another interesting aspect as well I try to understand, and that is the psychology of investing. And I don't know if you ever heard about the lizard brain, but
Oh, yeah.
how fear and greed operates and controls decision making. This is what needs to be suppressed within the investor to be successful. If you let the lizard brain control, you're guaranteed to lose completely. And also, you say it could be somebody you're trading against on the other side. Nowadays, it's a machine or an algorithm. So it's not even a human being. It's something way smarter. So
Yeah.
always be aware of that too.
It sounds like a joke, but knowing what to do and doing it isn't the same thing. Having a plan is step one, but following the plan when trading is really step two. And it's the harder step of the two, in my opinion. And that is really why I kind of came to the same conclusion as you. You need a model, you need a tool which shines you in the face and tells you that, no, what you feel right now is not supported by this model that you have done yourself. So you know, one way or another, you're wrong, and you better figure out which one it is. And
Like I'll give, related to that as well. I'll give you an example which I find so interesting regarding human psychology. Again, I try to convince people to buy Bitcoin at 4,000, at 6,000, at 9,000, at 10,400, at 20,000, 30,000, 29,000, 35,000. Couldn't. Bitcoin goes to 65,000. Guess what happens? The phone rings. They call, say, hey, is it too late to get in? Can you explain from your perspective why that is? People are afraid to buy at 9,000, and then they're hungry to buy at 65,000. And they've been watching it all the time. Is that truly the whole FOMO thing? Or how would you classify that for your audience? Because I've been
yeah,
trying
I
to
think
understand
that is precisely the FOMO. That is the FOMO mentality, and everyone feel it. It doesn't matter how long we've been in the game. I feel it too. Like, oh no, I analyzed this coin and then I didn't get it. Now it's running. I'm missing it. The FOMO feeling is there, and we just have to recognize it, but we don't have to act on it. I feel that is really the step to take, and realize that, okay, we missed the entry and we don't chase. In our process, we don't chase. So we look for the next one instead. But
Exactly.
this is easy to say, and everyone realizes that's the right thing to do. But when it's actually happening, it's quite difficult. How would you explain it?
Yeah, well, because I get peppered with thousands of questions every week, and one of the ones is obviously they go to coinmarketcap.com and they sort by the biggest gainers for the week, and they say, "Ooh, should I buy this? Can you analyze this token?" And I say, "No, why not?" "Well, it's just gone up 300% in a week. It's too late. You need to be in your position before blast off, not after blast off, because then you're guaranteed to lose 80-90% of the time." So I always say, you said don't chase. I always say don't chase, replace. Think about the old ice hockey star Wayne Gretzky, and I know Sweden plays a lot of ice hockey. Don't play where the puck is, play where the puck is going to be. So try and anticipate where the money is going to go next. For example, you look at the top layer one smart contract platforms, the big ones get the money first. And then the investors look for the cheaper ones based on market cap. Oh, that's only 700 million market cap. So crypto X is 50 billion, therefore it should be 100x from here. This is the mentalities, and that does work if the project is about to ramp up and get adoption. So that's another very important, I think, secret for investing now.
An important realization is that we don't need to take all the trades. There's no need to catch all of them. There is another perfect trade tomorrow. There is literally 10,000 coins just in crypto, and hundreds of them, maybe 1,000. At least they have some liquidity. And there's like 500 that has sufficient liquidity for most of them. We don't need to chase that one that everyone's talking about on Twitter. We can take another one tomorrow. And there is no need to feel that we're missing it, because it's like waves. They're coming every day.
Well, that's another key part of discipline as well, is the more you buy, the worse your returns will be. You basically diversify away all potential upside. And the other key thing is to make sure that if you identify something that's good, you go in with very high conviction. And always take into account taxes, of course, as well. Of course, taxes in Sweden are very important. Taxes in the US are very important, depending on the state. And that's what other people, new people to the game, don't realize. They think, oh, I doubled my money in a month. Aha, you live in California and you've got over a certain amount of income. 53% goes to the tax man. They don't realize that. No. And that's another big problem. So frequency trading can be very expensive.
It's very, very important point. It's easy to get. There are many ways to get in serious trouble with crypto. One way is, of course, to take loans and then lose the money. Another one is to not realize that you've taken a loan. You have a debt to the tax authority, and you don't realize you have it, and then you lose the money back, but you still have the debt to pay for your tax, but you no longer have the money. Well, they don't care. You still have to pay the tax, and there are a lot of rules. And like you say, Sweden especially has a lot of different tax rules. It's very different rules if you invest through a certificate in one investment saving account, as we call it, or if you invest physical crypto. Is different rules, and if you have physical rules, you cannot deduct the losses from the wins. So if you trade back and forth, you start with $100, you always have $100, you trade back and forth, and you just end with $100. You never had more than $100. You can still owe $1,000 in tax, because somehow the rules haven't caught up with the nature of these crypto assets, and until it does, it can be very dangerous. And say that hypothetically, crypto runs up on 31st of December. People swap between some different cryptos. They realize the capital gains, but then it drops again on 1st of January. And if they haven't secured that assets, then they are in trouble.
So true. There's another interesting phenomenon that I see a lot too is, and this comes from the stock market to what I see now happening in the crypto market, is people, they look at Bitcoin, oh, it's say 56,000, it's 57,000, that's too expensive. I need to buy at least one, therefore I can't. Then I'll buy Ethereum. Oh, Ethereum is 4,000. It's too expensive, I can't buy that. Oh, Shiba Inu is 0.0000 whatever. I can buy 1 million of them. And when it goes to $1, I'll be a millionaire. This mentality is extremely dangerous too, and it used to happen as well in the stock market with what they used to call penny stocks. Penny stocks are penny stocks for a reason. They're cheap for a reason. And if you look at the biggest and best stocks on earth, the Googles, the Amazons, the Teslas, they're all $1,000, $3,000, $3,500, whatever. There's a reason they are expensive, is because they're good. So don't let the price of something turn you off or turn you away. I think that's a very important thing. And then the other key lesson that I'd like to share with the audience as well is let the winners run. Sometimes it's good to harvest profits on tokens or assets where the fundamentals aren't improving or they have bad tokenomics. But if you have a winner, let it run. Because the winners become black holes that suck in all the money. All the money eventually gravitates towards the winners. And there's no denying that. It's just human nature. The winners will be things like the Bitcoins of the world and the Teslas of the world. They'll just suck in all the money over time. So Your audience should remember that too. But don't be excited by the shiny thing in the room of the day.
Exactly. It's quite common that the biggest player remain the biggest player.
Yes.
So what do you think about the Bitcoin price action right now?
I think it's very interesting. I have a theory that obviously it's being heavily suppressed because of the hedge funds. They're in very big short positions, right down around that kind of 55K level. But that's all going to change real soon. I always had this deadline from the 25th of November onwards, which is tomorrow, coincidentally. It's a Thanksgiving Day. There's going to be a strange phenomenon of very low activity, very low volume, etc., etc. Liquidity is going to come. There's a lot of stable coins on the sidelines ready to jump in. There's a lot of investors just waiting for the right time. And I think there will be some sniping happening over the next 2 or 3 days. So as I said, I wouldn't be surprised if I see a $62,000 Bitcoin, $65,000 Bitcoin by the end of this month, which is 6 days away. So that is a very aggressive statement, but it's just things I see in the charts. It's like a coiled up spring. It's ready to go, but just not yet. But that could happen over the weekend or Friday or even tomorrow.
Larsson line still gold. We're not dead yet.
No, I think we have it'll be a very much elongated cycle as we go forward. So we're going to go out to Q1, maybe Q2, 2022. And the more gradual the adoption of Bitcoin, the more money comes into it, the bigger the asset class. Remember, it's a $1.2 trillion asset, and it takes a lot to move it. So it just takes a lot of money. It is the ultrasound money. We're in a very inflationary environment. I don't know what the inflation is like there in Sweden, but I'm sure it's like the rest of Europe.
Yeah, it's picked up this year.
Yeah. And Bitcoin is a credit default swap against sovereign fiat currencies, which are going down. And now what really is amazing to me is, the youth of today, people in their 20s, never had an interest in economics. But you can go to any 20-something-year-old that invests in crypto. They can tell you what Austrian economics is and why it's important. We've never had in the history of the world, unless somebody was forced to understand and take economics classes, we never had people procuring knowledge like today. And that for me is very fascinating. So, and then the future, the next 10 years will be incredible. We're at that tipping point of, where Bitcoin adoption is 2.5%, 3% of the world today. Once we get to the 10% level, which could happen in 2 years, then we will see absolute takeoff. And again, the biggest asymmetric bet of my life. So
I feel that crypto teaches young people investing and economics in a way that has never happened before. Because as you said, it used to be boring. Now there is like real money on the line. And then people are motivated to study and learn and understand and read. Like the school just can't bring that kind of motivation. I think that will change things, because economics used to be something that only very few people understood. You have studied, I took a second study program after the Master of Science. I've studied it, but most people haven't studied it and they feel, okay, I can never understand it anyway. But with crypto, you do feel like you can understand it even after studying a little bit. And I think that brings people in, and then you're motivated to learn more. And the more you know, the more you enjoy learning more. And I feel that it will bring up a whole different generation that understands money that the world has never seen.
And understand where the money is. So it's not just money and macro, but it's this $450 trillion in assets that are at risk. That's money supply, that is bonds, and many other assets like gold. And these will all eventually go towards Bitcoin. And when that happens, it's just going to be a very exciting time to be alive. So
guys, if you want your coin analyzed, tune in to the upcoming joint InvestAnswers James and CTO Larsson. That's me. Joint effort to try to help you guys, serve you some analysis.
We look forward to it.
Don't be too offended if we, don't...
we could have a simple answer as well. We could speak in code. So if we say, I like it, or I buy it, or I own it, that's a bullish sign. If we say, nah, tack, or say something in Swedish, no thank you, then
That's right.
that's kind of our conclusion. So we can, that way we won't offend anybody that doesn't speak Swedish.
That could be fun. I truly enjoyed this talk. So guys, this is recorded on the 24th. We'll release it on the 25th. So if something changes before that, you know that it's not because we've been sleeping under a bridge.
With no Wi-Fi.
I will edit this tomorrow.
Well, it's been a great pleasure. Thank you so much for having me. Awesome.
Hej då. It's up! Finally! Like and subscribe to both James and my channels, and see you in this video next. Thank you, tack. CTO Larsson out. Hej då!